Ah, there we go.
All right.
All right. Good morning. Brendan Rendo with the Homes in Orlando team, along with my good friend, Joseph Dion of Apley Home Loans. Good
Hey,
morning.
good
How
morning.
are
Good
you?
morning. Good.
And,
Good.
and we are.
All right.
It is a good tune. It's like boom,
Right. Got a little fun, right? Got to have some
Yes.
fun. And with all the craziness in the world, got to have some fun when you can have it.
It's like we were just talking. It's gotten a little crazy, hasn't it? Not like it hasn't been crazy the past 2.5 years, but
Right?
oh, but let's start off with some good news. Mortgage rates.
Mortgage rates. Oh my goodness. We actually had like 2 days in which we saw rates decrease a little bit, modestly, like very modestly. But the positive is that we've seen kind of a little bit of a stabilization. Hopefully, might be too early to say that, but we're back under the national average is back under 5. Considering we were at 5.25 a week ago.
Yeah.
Great news. And talk about like how much things change. We went up over a quarter in a week and back down a quarter, all in like a 2.5 to 3 week period.
This has got to be probably one of the most volatile markets I've ever seen. Yeah. I don't remember. I mean, you can tell from gray hair. I've been doing this for a while. I think back even, late 90s. We ran through some jumps.
Yeah.
Through the Great Recession.
Yeah.
I don't remember it this volatile this long.
Yeah, that's the hard part about it. I mean, it's been since early 90s since we saw movement in this direction. And the problem is we're seeing it just go everywhere, every which way. Things that normally don't have as big of an impact have a much bigger impact. And then you kind of compound it. You had like this, this week they had inflation numbers come out, right?
Ouch.
So, and we all saw what those look like: 8.5% year over year for the month of March. 8.5% inflation. Like, that's a big number.
Mm-hmm. Yep. And I think it just kind of goes back to what we've been talking about is you look at, you got inflation jumping, prices jumping. We're going to look at some actual numbers from Stellar here for the month of March.
Mm-hmm.
But you've got those things pushing people up. So you're thinking, prices may start coming down, but then it's the old supply and demand rule.
It wins out, right?
Wins out. It kicks everybody's butt.
Mm-hmm.
But let's hop in and let's just take a look at some of the numbers that came out this week.
Yeah.
These are the March numbers that we get from Stellar every month. They usually come out, around the anywhere from the 10th to the 15th, that time frame.
Okay.
So when you look at it, it's a little bit of an increase from last year. We jumped about 300 listings.
Okay.
Nice thing is we did jump from February.
That's good.
Which is good. So we got 21,000 new listings. But then you start diving into the numbers.
Okay.
And the number of pending sales is 24,000. So you got 24,000 pending and you only got 21,000 new.
So we're not actually increasing.
We're not actually increasing. Yep.
Okay.
And then you start looking, there's the volume, $8.2 billion sold in Central Florida.
Wow, that's just Central Florida here.
That's just Central Florida.
What counties does that include again?
We're basically going from Brevard, Volusia, all the way over now to Tampa.
Okay.
So basically take the I-4 corridor, and that's pretty much everything through the I-4 corridor.
All right.
But let's go back.
If you drive on I-4 daily, you're included in that number.
Exactly. So we go back,
and
this is the thing that's hurting. Active listings.
Wow.
14,000. Look at the number compared to last year. We're down 29%.
That's a big number. So
that's huge.
So even though it looked like, theoretically, hey, like we've got more, but really it's less.
Mm-hmm. Yeah, everything is selling.
Mm-hmm.
I mean, where we should be to be a neutral market is about 26,000 homes.
Okay.
We're 12,000 short.
Yeah. That's a lot. Like, so we're almost half of where we should be.
Yeah. Yeah. And that's why, you're looking at the inflation numbers, you're looking at interest rates, and you're thinking, well, it makes sense that, the market would start to cool off, but then we're headed into spring, which is when everybody likes to move.
Yep.
And we've got nothing to sell.
Yeah.
Nothing to sell. And the average, I always like to look at when I'm looking at, doing a new listing, I always actually like to look at original list price versus actual sales price.
Okay.
And we're 100% or better on everything.
Oh, wow.
Sellers don't have to give a dime. If they don't have to negotiate anything, they just say, no, this is my house. We're still doing the as-is contracts.
Yep.
And unless it's something that you can't get closed because it's an insurance issue, which is those are the biggest holdups these days.
Yeah.
But honestly, you may run into a roof issue.
Mm-hmm.
Maybe the AC doesn't work. It's got polybutylene plumbing. Things that may kick it out because of insurance.
Yeah.
But even then, buyers are willing to pay for it.
Mm-hmm.
It's like, wow, I got to buy this house. I had to go $40,000 over list, and now I've got to put a $20,000 roof on it.
Yeah, we literally, and it's exactly what's happening. I mean, I've got a file in process right now where, we get in, buyers paying, I think they're paying like $32,000 over list. It was like, 8% over list price. And then you go into it a step further. It's original roof. The house was built like original roof, and the house was built in the late 90s.
Oh my gosh.
How the seller hasn't replaced the roof is beyond me. But, so then the buyer's like, hey, like, it obviously you can't, like, no insurance would touch it.
Yeah.
Like, and the seller was kind of just like, figure it out. I'll give you a week. Like, literally that was the seller's response. Figure it out. You have a week. And our buyer was like, we'll put a new roof. Let's get the permit. We'll do this. We'll pay it at closing. Like, and it's like, the seller had the leverage every which way.
Yep.
I mean, I can't even believe it.
Well, it's, we're still getting, I've got a house down the street from me that was purchased by Open Door. And I went to, it's in my neighborhood, so I always go look at the houses. Yep. And the house had polybutylene plumbing, had a 34-year-old AC unit.
Oh my goodness. It was great though. They tuned it up.
Yeah. The roof was 25 years old. And the retention wall in the back, because it sits kind of on a hill, was cracked and falling down.
Okay. So perfect.
Okay. Right. Like, perfect. Hey, you only got to drop 60.
Through some new carpet and repainted it.
Right. Exactly. Yeah. And you're looking, what, for that roof, 20 grand, the poly, probably about 8.
Mm-hmm.
Let's see, the retention wall, rebuild that, probably $6,000 to $7,000. And then the AC unit these days, $7,000 to $8,000.
So $42,000 all in.
Yeah, $42,000 on a good day.
Yeah, and that's not even trying to, put the touches to make the home yours.
Yeah, and someone bought it for list at $402,000. I about fell over.
It's just it's so tough, and I think there's a little bit of that scarcity. Like, buyers feel like, what are you going to do? And that's the hard part is, you want to give good advice, and you want to talk, and you want to be an advocate, and you want to talk to your clients about it. But you're kind of like, the conversation I have a lot with clients right now is like, hey, this is what it is. Like, everything's trending that rates are going to continue to go up. Home values are going to continue to go up. We have everything. The data's kind of saying it all. Even if it slows down, it's still going to be more expensive in a year if you wait.
Yep.
So it's kind of like, hey, secure, what's the saying? Like, rent is 100% interest.
Yes.
like, lock in your rate of interest, your interest rate for 30 years now.
Yep.
Like, so it's kind of like, hey, which would you prefer? Would you rather start making equity or not? Like, and building equity, building net worth, or continue to rent and giving somebody else that, building their portfolio up, so to speak.
Yep. Yep. It's interesting because I did read a couple articles this week. I think Realtor.com came out with one, and I forgot who the other one was. But buyer remorse is higher than it has been in ages.
Yeah.
And which I can understand, because I've sold houses basically sight unseen, video walkthrough.
Yeah.
And I can understand it because people, they're so anxious, so desperate to get a house, that things that they won't accept in a normal market, it's like, okay, we can live with that. Okay, we can live with that.
Yep.
Yeah, we can live with that. And you're getting people, you're getting that buyer's remorse.
It's almost like in the chase, because the inventory is so low and it's so aggressive and it's so challenging. The challenge becomes just get something.
Yeah.
And it's no longer like, hey, here's my wish list. Let's try to get 7 of the 10 things.
Yeah.
Now it's like, here's my wish list. I want a house.
Like, does it have 3 bedrooms and 2 baths? Okay, good.
Great. I'll buy that too.
I'll buy that. I'll buy it. I got it. I'm in. And one piece of good news I did read yesterday.
Yep.
Was, and this was from Realtor, was that 66% of people who are current homeowners are thinking of selling their homes this year. I'm like, sell now.
The hard part about that, and I'm just curious, like, as you like sell now, like, right, like everybody wants, but I think a lot of people are sitting there because, like, I think about this. I'm like, man, I'd really love to sell. I've got a lot of equity, but then you pause and you go, well, what am I going to buy?
That's the hard part. I mean, we'd actually, had discussion with my wife that, hey, we kind of like to get outside of Orlando. Maybe go up towards Sorrento, Eustis, that area.
Yeah.
Get like an acre, something with an acre of land. And she went through, the listings. She's like, oh my God, there's nothing. I said, I told you. And I'm like, we get the automated valuations. I check my value all the time, and I'm sitting around $400,000 right now. And so I've got a just like you, great amount of equity.
Yep.
But that equity isn't enough for me to go buy the house I want. Even I couldn't do a lateral move right now.
Yeah.
I would actually go down in quality of house.
Well, that's the hard part, is values went up, but rates went up too so rapidly that you do have to deal with a little bit. Like, if you were anybody that bought, last year, or let's say 2019 to 20, end of 2021, like, not only are values continuing to increase, but rates have increased at such a rapid rate that equity may only get you a lateral move, because it's more expensive to have a mortgage now because of those rates. Like, it almost washes this equity, and the increased rate kind of washes you to that 200,000 in equity you have. You go buy something that's 200,000 more, put the 200,000 down, and you're still ending up with a little bit like looking at the same price point you were.
Yep. So it's an interesting dilemma that's been created in the housing market.
Yeah.
Because you can see a lot of people who are like you and I, where, hey, I've refinanced. I cut 8 years off my mortgage, got down to a 20-year mortgage.
Yep.
Locked at 3%. Why would I move and pay a 5.25% or 5%?
Yeah. And I was talking to a client I pre-approved, and just to give me an idea, I pre-approved. They were pre-approved for $650. Right about that loan amount of $650. They were looking to buy a little bit more, but just the difference in rate for them. Same price home. If we were to gone back to December, that house is costing them almost $1,000 more today than it was in December.
Wow.
Like that's a big difference.
That's
Now,
huge.
there's still, it's not, on smaller purchase prices, what you see, like, it may only be $100 or $200 more. And a lot of people can stomach that, but you're talking $1,000 when you get in the $500,000 plus range, that difference starts to get to $800, $1,000, or even a little bit more. That's a big impact. And right now, to get that, like, that I call it like that move up house, like not the starter home, that next house.
Yep.
You're gonna be spending $450, $550, $600 to get that next home, and you're still gonna have to compromise with where markets are and with where housing is right now.
Yep.
Yeah. I mean,
it's just, it's difficult until until we start until that inventory starts pushing up.
Yeah.
Really, I think even if we can get back up to 20,000 active listings, I think that will take a lot of the tension off.
When we look at a lot of this too, obviously we have everybody that's here already, and but where I feel like we have so many people moving to Central Florida, moving to Florida in general, that's kind of part of the challenge too. That's why we can't get that inventory up, which is great for equity. It's going to continue to help build equity. I think that, even in the uncertainty of a lot of what's going on, that Florida's kind of still going to be like, right now it's going to be the one, and it's going to be the state that I think bucks a change if there is a change in the marketplace.
I agree with you there, because it's just, everyone else may go like this and we'll be like,
yeah,
yeah,
it'll be very, very small.
I mean, the hardest part for me is, quite honestly, is seeing, I think you and I discussed this article the other day, that if you're not making $100,000, if you don't have an income of $100,000, your chances of qualifying for a loan these days diminishes dramatically.
Yeah.
It's something like 57% of all new homeowners make over $100,000.
Yeah, it's a big number. It's definitely a big number, and it's really interesting because you used to be and I even say this, like, you joke, like, you hear all the time on The Simpsons, like, The Simpsons, Homer Simpson, didn't go to college, worked at, a trade job, a union job, and owned a 4.2 house, right? And that was the epitome of the 90s, right? Like, you could do that. And now it's very, very difficult. Like, there's a lot of ways to make money. There's a lot of ways to do it, but that 40, 50, 60, 70,000 a year, it's a lot tougher to get the home that you used to be able to get, especially because guidelines, they are tighter. Mortgages are stronger. Right before, I know that we're trying to wrap up in a few, and I was just thinking about this. It just popped in my head. There's a lot of these programs, and I'm curious your thoughts on them. Like, great programs. Ribbon is one of them, and that basically, they give you that ability to submit an offer and have the investor that'll pay cash behind it. You can submit it as a cash offer. And I was talking to somebody about it because they were saying that they're submitting all of their offers, FHA and VA, and convincing their borrowers to do Ribbon. And I thought it was really interesting, or their buyers, and these were some of the agents I was talking to. And I love the program, but the concern is it's a cash deal. So whether you move forward with the program or not, the buyer has to pay that.
They got to
pay a fee, whether they cancel the contract or not, they're paying a fee.
Yep.
And then, the deposits there, like, there's all these different ways where I'm like, man, like,
one little thing goes wrong and you've just cost your buyer a lot of money.
Like, I was thinking, like, if one thing goes wrong, or like let's say that buyer goes in to buy the house and it underappraises, right? But they're past their contingencies and everything, and then now it moves forward and closes, right? Like, so now that buyer's on the hook. That buyer just spent 3%, let's say Ribbon, their fees 2.75 if Ribbon buys it. But now that buyer can't actually buy the home because it underappraised by $35,000. And they don't have the ability to bring that gap difference when it is time for them to buy.
Yep.
And I'm sitting here thinking, I was like, that buyer may not actually be in the market anymore. because
you
they just lost all their money.
Yep.
Like,
yeah, they sound good, but you
mhm.
got to do the math.
You have
You
to.
better make sure that your numbers are right.
Yep.
You know, it's
Got to
just
have the right numbers. And if you don't, like, it's great. Like, but if you have the liquidity or the liquid ability to be like, hey, like, if it under appraises by 25,000, I could bring that difference. Like, if
yep.
you've got cash or you have funds, or, you know, maybe you're selling a home that you'll have funds later, like,
hmm
it makes those programs make sense. But it can be, if it's an FHA or a VA, like, and your
Yeah,
borrower has limited.
where they've got the three, you know, they've got the 3.5 for the down payment. They've got enough to get you through
Yep.
the closing costs. You know, that's where you and I've worked with a lot of these people. And it's like, hey, okay, yeah, I'm going to take, you know, $1,000 from my commission and contribute to
Yep.
your closing costs. Because you never want to see anyone walk into a house totally cash poor, tapped out.
Yeah.
There's always stuff you want to do. I mean, even simple as painting the house.
Look,
Yeah.
it just always happens. And it's
Yeah.
like, you know, no matter how perfect you think the home, like, I joke, like, my wife was like, oh, this is my dream home. We moved into that thing and she had a list 40 things she wanted done. Right? Like, you know, the house is perfect until it's yours.
Yes.
You know?
Yep. Yep.
But yeah, I think, you know, that's just, you know, one thing. And I know it's kind of a little bit of a tangent, but
No, I understand completely, because everybody wants to be competitive.
Yep.
And you don't want to lose.
Yeah.
You know, it's a shame, because you see a lot of people, excuse me, who won't even look at FHA or VA loans.
Mm-hmm.
They just immediately throw them down. They go cash, conventional, FHA, VA. VA
Yep.
to me is still one of the strongest out there. I have not had any problems with VA appraisals. That's always the thing. Well, the VA appraisal is different. No, not really.
It's so tough, because VA has the bad rap. It's,
Mhm.
you know, maybe, you know, it was a lot harder to do VA in the 80s and the early 90s, but now VA is. And honestly, like, if I have a client that qualifies for VA, I don't care if they have 200K cash. Like, I still think VA is the best product
Mhm.
available for them.
Yeah.
Now, you know,
Didn't you just do a $2 million VA loan?
What was that?
Didn't you just do a $2 million VA loan?
Our team, yeah, we just closed a 2.25 VA
That's
loan,
fantastic.
100%. You know, 100% LTV. The borrower, like, literally, no joke, borrower went into the property with about $13,000 total invested.
Oh, jeez.
And here's the thing. He had the money. He could have done a jumbo and put 20% down.
Uh-huh.
But you know why? He got a lower rate with VA, and he kept all that cash he had in his bank.
Yep.
And he can have that money working for him still. Yeah, well, I say in his bank, not in his bank, but, you know, it's working for him in his pocket, you know, because he's losing money if it's just in the bank, right? But you know, and that's the cool part about VA is, like, it does give those different options. You know, it is 100% no mortgage insurance, which
Yep.
gives those buyers, you know, more buying power.
Yep.
So, well, I know we're about at time. We always go over. So
I know we always go over a little bit, but it's just interesting to see where the numbers are.
Yeah.
Understanding where people's frustration is.
Mm-hmm.
And again, it's the old supply and demand. As you know, even with rates going up, you know, inflation going up, everything going up, you still need a place. What's everybody need? A place to live.
Got to have somewhere to live.
Got to have somewhere to live.
Yep.
You know,
and even though interest rates are going up, rent rate is going up even faster.
Even higher, even faster. Exactly. Well, enjoyed it this morning, as always. We shall see you next week. Everyone ever has any questions, always feel free to reach out to us. We're here to answer questions and make it the home buying process nice and easy and smooth as possible. You guys take care. Have a wonderful day.
Bye.